GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as rare as pulling off the thanks, you too, without a hitch. I'm your host, Jay Hamilton, and today we are joined by Milk Road Pro researcher Martin. First time on the show for Martin. Super excited to have him because Martin spends every single minute of every single day deep in the analytics, looking at what's going on chain. And one of our favorite tokens is Maker or Sky, which is their new name. And today we're going to talk about what is going on with Maker. Maker's been on an absolute roller coaster. Back on June 12th, we did a show about why we believe that Maker was one of the most undervalued assets, one of the most undervalued tokens, and how we thought it could 20x in this cycle. Now, we're not perfect. We're not always right. What happened since then? Maker dropped about 65%. Now, it has jumped back up in the last week as all crypto is jumping back up, but we're still feeling pretty good about Maker. Now, we did an episode a few weeks ago on October 12th where we had one of Maker's past leaders come on the show and talk about why he's actually bearish on Maker and the issues that he sees. So you guys can go back and check out that episode if you want. But today, Martin is going to break down, is it time to sell your Maker, or is now the time to double down and buy it at a bargain price? We will be answering that today and giving you our investment thesis so that you can decide how to treat your portfolio. And you're going to want to stick around to the end because Martin's going to give his prediction for the Maker token in this cycle. Now, before we jump in, we need to take a minute to hear from our sponsors who make this show possible. Whether you're bullish or bearish on MicroStrategy, T-Rex ETFs are your gateway to dynamic market plays. Get exclusive access to leveraged exposures with the first 2x short or 2x long ETFs designed specifically for MicroStrategy stock. Position yourself with precision. With T-Rex, you gain access to powerful tools for sophisticated investors. Meet Uphold, a trading platform that's changing the way you think about money. Imagine this, earning up to 4.9% APY on your US dollars. No catches, no lockup periods, and no fees. And yes, it's FDIC insured up to $2.5 million. They offer access to over 300 digital assets, which you can trade, store, and exchange with confidence, knowing Uphold operates with a 100% reserve and a transparent model. Create your account, fund it with a few taps, and you're ready to go. Click the link in the description and join Uphold today. Martin, welcome to the show.
Good to be here.
I'm so excited to have you. Let's start with within the Milk Road Pro portfolio, which is one of the daily things that you look at. There are 12 tokens. Now, I'm not going to tell everybody what the 12 tokens are in Pro. You're going to have to go Pro if you want to find out that. But I am going to tell you that Maker is one of the tokens. I won't tell you how much we hold of Maker in the portfolio. Again, you'd have to go Pro to find out that. But you could have picked thousands of tokens for the Pro portfolio, and you picked Maker. Why did you pick Maker?
I think we have a pretty straightforward thesis. Like, we are always looking for strong fundamentals. So in case of Maker, it's obviously product which is working. There are users paying for using Maker's products. So you can think of strong fundamentals, like Maker is generating 300 millions in annualized revenue today. So that's pretty something. And it's among the top, 5 applications in crypto these days, generating these amounts. And then we are pretty much looking for the valuation, because we don't want to hold and buy overvalued tokens. And Maker is trading around 20 PE, price earnings ratio. And just to give you a perspective, if you compare it with S&P or NASDAQ, they are around 30. And if you compare it with NVIDIA, for example, it's trading around 70 PE ratio. So you can see that it's still undervalued just using these basic benchmarks, basically. And the third thing we are interested in is we want to see growth. So today, Maker is trading around 20 PE ratio, but we want to see the future growth for Maker and this forwarded P ratio becoming even lower than this 20. So if we kind of create our model where we are projecting Maker's future revenue, we think it's gonna hit maybe 1 billion next year in revenue. So like those three things combined together, that's why we hold Maker.
Those three things sound pretty damn good. So if you're looking for a token which has no revenue and is purely speculative, which many of them, most of them are, this is not the show for you. If you're looking for a token which is one of the top tokens, one of the top businesses in terms of revenue, then this show is for you. As Martin said, 300 million in annual revenue for Maker. That's absolutely incredible. Their price to earnings ratio makes 0 sense that it's so low to me at a 20x when there's so many others that are so much higher. We didn't even mention within crypto how high some of those price to earnings ratios are. It makes 0 sense. So look, Maker's basically it's a bit of a unicorn within the crypto space to have the growth that they've had, to achieve the revenue that they've had. Can you just give us a little bit of a history lesson? Because I think in order for everyone to understand where we are now with Maker, we sort of need to look back to their beginnings and understand their growth.
Yeah, sure. It's pretty funny you say unicorns because we don't really use these terms in crypto, right? But if you are like in traditional markets and looking for new startups, you are basically looking for another unicorn. And here in crypto, there is like tens of unicorns, and like no one really called them unicorns. So it's kind of funny. But yeah, Maker started like early 2018 or something like that. And just to give you a perspective, like 2020, Maker has TVL around couple hundred millions, I think around 300 millions in TVL or something like that. And then the DeFi took really off, and summer DeFi happened. And in 2021, Maker suddenly have around 10 billions in TVL. So they experienced amazing explosive growth, which is for every startup really hard to kind of manage properly, right? Because, well, not many startups have a luck to experience this kind of growth, right? But it also leads to things that you are overhiring, you are having processes kind of chaos, you are also increasing complexity of like everything what's going on, and this department doesn't have idea what the other guys in your team are doing, so it's kind of messy. And yeah, that's what Maker has experienced. And many people are actually like, hey, Maker was mess, they were over hiring, and if you were just trying to get everything what's going on with Maker, it was almost impossible. And critics say that Maker, no, my point is that's something that every successful application in crypto will kind of experience in the future, probably in this cycle.
Mm-hmm.
But so Maker is pioneering everything pretty much. They were the first DAO, they were the first product, the first application with product market fit. So they are in front of everyone else, experiencing that everyone will also experience in the future. So yeah, like my point is we should, like everyone should look at the Maker and trying to learn what they've experienced and how they are trying to solve things today, and like learn from them and try to apply it for you, because this cycle, it's gonna happen to many projects, but they are not ready for that growth either, so they will challenge the same issues that Maker.
Mm-hmm. Yeah, it's interesting. And Paper Imperium, who is the Maker delegate, the former leader who came on the show a few weeks ago, he talked about this, exactly this. Maker's bear case is the same as their bull case. They grew so fast. And when you grow that fast and you have that much success, it creates challenges. It creates issues for you. And that's where, yeah, those growing pains are causing some issues for Maker, but those are also great things. Like it's very bullish to be growing that fast, obviously. Now, what ended up happening, Maker had this crazy growth through 2020, 2021, through DeFi summer. And then they needed to deal with this. They needed to deal with all these issues that they're having. And so Rune, who is the founder of Maker, came out with this proposal called Endgame. I'm not talking about Avengers Endgame, the movie. I'm talking about a proposal to basically deal with all of these issues. He called it Endgame. Can you just give us a brief idea of what is Endgame and why it had so much controversy when it first launched?
So Endgame was pretty much Maker's answer to all these things you just named. And it should help to streamline the processes, reduce the complexity, also try and kind of outsource some parts of risk that Maker is involved, and yeah, like basically simplify everything that's going on with Maker and try to create kind of small sub DAOs around Maker who will manage specific parts for Maker. Some of you might expect that everyone will be happy with this kind of new idea, new direction for Maker, but that wasn't true actually. There were a lot of internal fights and wars between the biggest NKR holders, but eventually this proposal passed, and now Endgame is being developed, and we have seen the first kind of release of Sky, which is a new brand of Maker, and yeah, it's just the first step, and there is additional steps, and which we'll see in the future.
Okay, and we're going to talk about Sky and all these steps. And so Endgame started and got voted through, started in 2022, and we'll talk about what's working and what's not working. But first, I want to go to we talked about Maker having $300 million in revenue at the beginning of the show. So let's talk about how the heck do they make all this revenue? It's incredible the amount of revenue they have. And one of the key ways they make this revenue is from investing in US treasuries, which for a decentralized protocol to go invest in US treasuries is an interesting decision. What was the thinking behind the move to invest in US treasuries? What results did it lead to?
Again, Maker very soon realized that DeFi yields and overall crypto sentiment is going down, and so are their revenue, because they were pretty much making money from leverage in the system.
And when was this?
I would say like 2022, 2023, because DeFi yields went down and TradFi yields on US treasuries, because central banks were raising rates. So the yields on US treasuries went up. So Maker realized that opportunity, and yeah, they started around 2022 something. But yeah, they pretty much were able to tap into that off-chain yield, which was very interesting. And even though some people didn't really like that, because what that means is that DAI was at some point backed by US treasuries, which is obviously centralized thing which people didn't really like. But if you look at it from an investor perspective, you are happy, because that was very smart move and kind of inevitable. I I don't know how Maker would look like if they wouldn't do it back then. So from an investor perspective, I was really happy they did it, and it made them a ton of profits. So it was a good choice. But then you hear the other side of people saying like, hey, we like Maker, but it's not decentralized anymore because it's backed by centralized US treasuries or centralized US dollars like USDC from Circle, right? So like I can see both arguments here, but I feel like those people who are like very ideological, thinking about the role that everything should be decentralized and super censorship resistant, are kind of losing track of what businesses are about. They're about making money, right? So like I would say they should put all these ideologies aside and focus on what's the best to make a business. And I think Maker did the right move and tap into that opportunity back then. And now they are like again like going down, and that share of real world assets on Maker balance sheet is going down because central banks are now decreasing lowering the rates. So the yields in DeFi will start to go up, and actually they are already much higher today than like yield in traditional yield for finance. So yeah, that's what's happening today. And like if we are looking back, Maker did a right move, I think.
Yeah, and it's clearly did the right move because as you mentioned, so this is in 2022, 2023 bear market. They're not getting a lot of revenue within DeFi. They see that they can get 4 to 5% yield just from US Treasuries. Super safe, super simple, no risk to that. They take $3 billion, they throw it in US Treasuries, and they make 150 million annually in return from that. If you're an investor, you're like, amazing, thank you, well done. You're taking care of the business. But the challenge with it is it did lead to their balance sheet being pretty heavily at one point 65% was in US Treasuries, which obviously a lot of the decentralization maxis got a little bit upset about. Now we have a decentralized stablecoin, a decentralized business that is trying to live these ethos, and they're becoming quite centralized. This is the point of the story where Spark enters the picture. Can you explain how this new Spark protocol fits into Maker's strategy and why it's going to be such a game changer?
We need to understand the Maker, and their core business was you can come to Maker, deposit ETH, and borrow against your ETH. Then later on, they added Bitcoin and few more assets, but you can always just take a loan against one collateral, so either ETH or Bitcoin. But they also realize that there are some people who might want to just lend some assets, but they don't necessarily need to borrow assets against those. So think of Aave, like people are using Aave, but not everyone is borrowing from Aave. Some people are just lending on Aave because you can lend your stable coins and get some yield, or you can lend ETH and get some yield on top of your ETH. So that's awesome. So they were like, okay, we basically want to bring more people into Maker ecosystem, but they are not gonna lend to Maker because we do not provide that feature. So we might need to do something similar to Aave. So Spark was launched, and what they do is they forked Aave contracts. It was a friendly fork, like Spark is still paying some money back to Aave because they just kind of copy pasted their smart contracts. But now what it means that people can come and lend or borrow from Spark, and Spark is on the back end. Spark is kind of tapping into that liquidity which Maker provides. So like whenever user wants to borrow from Spark, Spark communicates with Maker and new DAI is minted against that collateral, and that's how they make money. And it's bringing kind of more revenue lines to the Maker because, yeah, this kind of lending, borrowing market is pretty huge. So it makes sense for them to expand their revenue lines even more.
And we're going to talk about Spark's relationship with Maker in a few minutes in this episode, because it is an interesting relationship. But basically, you can think about Spark as sort of a spin-off of Maker. It's a business that was started by Maker and is now spinning off in its own business, essentially. They call it a sub-DAO or a star, but we don't need to get into the jargon. Okay. You love Maker, as we talked about at the beginning, because of the fundamentals. And we talked about revenue. And I think, you just can't underpin how many, especially right now, like in crypto right now, we're this weekend was nuts. I'm sure you were checking your phone all weekend. So was I. Like, prices are going crazy. Nothing makes sense. Cardano is up like 80%. Cardano, like a ghost chain, a dead chain that has nothing going on in it. I'm sorry to all of the Cardano holders that are listening. Actually, I'm not sorry. You guys are all probably pumped because Cardano's up and it's doing well. Everything is up. Everything's going great. And when you have that happening, what happens is a lot of people just start to think that exactly this. Every token is going to go up, which in the euphoric stage of the bull run that we're in right now for the next few months, I don't know how long it's going to last. You're probably right. Everything probably will go up. But it is nice to, when you're thinking about your investments, to think about, hey, let's invest in things that have real fundamentals, because what that means is when everything goes down, the things with real fundamentals don't go down as much. They go down less because they are real businesses that are going to survive the bear, whereas a meme coin might just disappear the same way a lot of NFT projects disappear. So let's take a look at the fundamentals behind Maker, and in particular their revenue, because I think their revenue tells a very interesting story. Can you break down the different revenue streams that Maker has?
Yeah, sure. So here, looking at this table, the first one is Spark. So that's something I just described. It's pretty much something like Aave, where people can lend and borrow, and at the back end they use Maker. Then there are cash real world assets,
And maybe
which are,
maybe let's give us the amount of revenue coming from each one of these things as
oh
well.
yeah. So from Spark, it's 120 mil almost. So it's pretty significant amount, right? Then there are cash real world assets, which are US treasuries pretty much. And it's 59 million annualized. It's a Maker buying US treasuries. The yield is like 4.5% or something like that. Then there are stable coins, which are kind of in a special world, which is lending all these stable coins to Coinbase Prime. And they have a deal with Coinbase, which pays Maker for around 4% annualized again. So, and it's bringing home 46 million. It's also pretty good. But like, be aware that those cash real world assets as well as stable coins, the projected yield will go down because central banks will lower rates, right? So these like over also thinking about the distribution that Maker is making revenue today will like go down from these real world assets and stable coins, which are kind of pegged to real um, to the real rates in traditional finance. But Spark and Core will just go up because the yields in DeFi rails are now picking up. And if you look at Athena or Aave, you can find like 15, 20%. That's pretty insane. So the gap between yields on US treasuries and the yields in DeFi are just going to like differentiate a lot. And it's going to bring like more arbitrage opportunities. And like if you are talking to your neighbor, you might probably say, hey, how much you are earning on your savings account? And they will be like, hey, 2-3%. And you'll be like, I'm making 15%, Obviously it's not risk free, but I believe that if today there are already opportunities which are pretty much there is always risk, but the risks are very much reduced and mitigated, and they are close to zero. And then there is the last one. It's Core, and that's how Maker started. Basically, you can come in with ETH and Bitcoin and just borrow against it. So that's their core business they started with, and it's bringing around 75 million today.
It's amazing. You have a business that has 4 steady streams of income, very well distributed. Again, another reason why we like Maker so much, so well established, and income that can withstand both the bull market and the bear market. So you can swing in either direction here and get the best yield depending upon what's going on with the market. Okay, let's take a look at Maker. In the end is a stable coin company first, as we've talked about. One of the frameworks that you guys really like at Milk Road Pro is this concept of the North Star, which is like figuring out what is the most important metric that matters to us when we're looking at a token from an investment perspective. What is the North Star for Maker, and how are they doing at achieving that?
So we are looking at circulating supply for Maker, because think of Maker as an asset manager which has a minting facility. And the more DAI or USDS you can mint, the more revenue you can bring in, right? So like, yeah, we are just checking this one metric, which is pretty crucial. And we would like to see like more supply over time. And now we are around, 5.34 billion, which is great, but we would like to see like much more. And we think that Maker will have 10 billions plus next year.
Okay, so we think it's going to double. That's exciting. So
At least.
you mentioned at least, yeah. I know your numbers are always so conservative, Martin, which is also a good thing. Great to have somebody who's thinking reasonable and not making ridiculous claims, as most people in the space are going to make, especially over the next few months. So Maker has, when we talk about their products, they have two stable coins are their main products. They have DAI and they have USDS, which launched just a few months ago. And their stablecoins are doing something that no other stablecoins are doing, which you mentioned, which is giving yield. Can you give us a breakdown of these two stablecoins and explain what they do?
Maker is kind of trying to compete with others because they decided that they are going to distribute the yield to the holders, right? Because today, if you hold USDC or USDT, you are not getting any yield. You just have stablecoin which is pegged to $1, and that's it. But if you are from developed country, you don't really mind, and you don't have any incentives to do that. But like, imagine that there is a billion people living in Africa, and they have average inflation 17%. So you have strong incentives to use stablecoins, and you don't really care if there is yield or not. Like, at least the first step, right? You are just happy that you can get exposure to something stable like stablecoins, which is pegged to US dollars. So, like, yeah, I feel like sometimes people don't realize how great the stablecoins are. This is like, if nothing, this is amazing, and stablecoins are making the world a better place, right? And then Maker decided to compete with those giants on a yield basis. So they are making a ton of money, and what if they can pass some part of that revenue to the holders? Because Maker is only able to make money because people are using their stablecoin. So they are trying to compete by offering embedded yield in their stablecoins. So if you hold SDAI, which is a staked version of DAI, or if you hold SUSDS, which is staked version of their USDS, then you get automatically yield. And right now it's for DAI it's 5.5%, and for USDS it's 6.5. So there is a 1% change. Like, USDS is 1% higher than DAI.
And the reason USDS is higher is because they are trying to incentivize
Yes.
people to hold USDS right now, because it just launched a few months ago. Already over 1 billion in supply in just a few months, which has been amazing to see. So I mean, incredible. It feels, as you said, stablecoins are on their own are, if that was the all that crypto ever created, that would be a massive win for the world. But that's, most stable coins right now do not share yield with their holders. But Maker is doing that. They're sharing yield with the holder. I mean, it's a no-brainer in my mind. Why would you, if you're going to hold a stable coin, why wouldn't you hold staked DAI or staked USDS? But it's not all sunshine and rainbows for Maker. As we said at the beginning, they have their challenges. I want to make sure everyone understands their challenges. You mentioned that there's 4 challenges that they're facing in this report that you wrote recently. Can you briefly explain, maybe give us what are these 4 challenges, and then let's briefly explain each.
The first one is the new stablecoin from Maker is USDS, and the contract is upgradable, which means that they can do new changes to that contract. And Maker signaled that they plan to enable freeze function, which is like, they can freeze your assets basically. If there is some illegal thing going on, or I don't know, some government is pushing you to freeze these assets, they will just probably need to comply and do it. And like, the critics say that Maker just enabled that without really thinking about it. So like, because today, if you are using this new stablecoin from Maker, it's still using at the back end DAI contracts anyway. And like, if you enable freeze function on USDS, which is that new stablecoin, but it's still using DAI on the back end, it still doesn't make you kind of compliant with all the rules that are coming into crypto. So it was kind of, they say it was kind of just quick thought, hey, let's be compliant. We just enable this and it's going to be all sold out. But that's not the case really. And yeah, I don't really have any expertise here, but I'm very curious to see how this is going to play out. So that was one thing that people are not happy about. The other thing is that Sky migration and new brand reveal wasn't as successful as expected. And we can measure it by people not converting their MKR to Sky. I think there is just like 7% of MKR was converted into Sky. And even like if you look at CoinGecko or CoinMarketCap, or if you go to centralized exchanges, they don't recognize Sky at all. So it means like, was it really successful? Because like just 6% of all tokens are Sky, but the rest is still Maker. So what's going on? How should we move forward? It's still kind of question, and those are active discussions in Maker community, where to go from here and what to do with this situation, because now there are two tokens, and like if I want to invest in Maker, should I buy Sky? Should I buy Maker? Like which token will have votes in the future, this kind of stuff. So it needs to be figured out soon, obviously. Then there is also rumors that Rune is pretty much doing all the decision himself, and he is just surrounded by people who are saying yes to everything he says. They never challenge him. They don't provide like the other side. So there is kind of no feedback from the market. But I think it's changing, and maybe Rune at some point start to realizing that, okay, maybe I need to listen more like the broader feedback and like everyone else in the community, because like this is the feedback you need, and this is what you should be looking for. Like you might have a great visions and everything, but if people don't want to move to Sky, there are some reasons. So maybe you should kind of rethink like where should we be heading, because the community is giving you a signal, hey, people don't want Sky, they want to stay with Maker, they are happy with Maker, they were happy all the time with Maker. So what's going on? It's a tough position though. But at the same time, I say like, if the management or leadership of any projects is decentralized way too much, it can cause a lot of slowdowns and lack of direction and like inefficiencies in the processes. And so like I'm not sure. As I said, I feel that there are some changes happening on the back end, and Rune is now seen on different podcasts, on Twitter, on forum, on Discord. You can ask him questions actually, and he will reply probably. And yeah, I think this is changing, and I think having one person kind of in charge, it can be very powerful. But you need to make sure that this guy has some kind of limits and listen to feedback, and then it can be very, very successful and probably the most effective way how to build those kind of stuff. Yeah, and the last part was because right now like 95% of stablecoins, total market stablecoins, are stablecoins without any yield, which is giving us some signal, right? So maybe people don't really care about yield. So why should Maker be kind of tapping into this new unexplored market when we clearly see that people don't really care that much about yield? Maybe because there is 170 billion in stablecoins which do not offer any yield at all. So is it really gonna play out well for Maker that they are this trying to differentiate that they will be like stablecoin with superior yield? We don't know, but we are yet to see. But like my view is, I believe that today we see like those giants, USDS, USDT, and the Maker, Athena, Frax, those kind of centralized ones which are distributing part of their revenue with the token holders. we think that those will kind of converge and they will become the same thing. That USDC, and also USDT will at some point need to share some part of their revenues with their token holders. But the problem is that they are only able to tap into US treasuries or like real world yields. Basically, they can't really tap into DeFi rails. So it's still giving Maker and Athena and those kind of guys kind of advantage over those. But they are huge. They have a lot of network effects. They are accepted everywhere. They have on ramps, off ramps. So it's really hard competition though. But if that's true and market will eventually demand stablecoins, of course, assuming that security risks are managed and make sure that they comply with all the security standards that are used in crypto, So yeah, we are yet to see it. But like for me, why I love Maker is because I'm user of Maker. I borrow against my ETH, and I use and hold stablecoins of Maker because they give me a decent yield, and that's why I'm using it. I don't use USDC or USDT. They don't give me anything, but I want yield, so I'm using Maker's product.
Yeah, and I think what's interesting is right now, most of stablecoin usage is in countries where they don't have access to a currency as stable as the US dollar, right? Like their currency is inflating. You mentioned this before. So for them, having access to a US dollar is just a win. They don't care about the yield. But long term, once we get more crypto rails into TradFi, once we have more people on chain, those people are going to want yield. And that's where long-term we believe that their savings account strategy could work out. Now, there's also a few catalysts that there's a reason that at the beginning you said, Maker has 300 million in annualized revenue right now, but you believe it could get to $1 billion in the next year. Can you talk us through some of the catalysts that you see for Maker and why you think they can grow so much in the next year?
Yeah, sure. So just a few days ago, Spark tokenomics were released. And what it means for Maker is that Maker will have pretty strong incentives for the next, well, let's say 10 years, but within next 2 years, 50% of Spark tokens will be distributed to either Maker holders or Maker users. So if we do some basic assumptions that, I don't know, Spark will launch around 2 billion FDB, it means that 500 millions will be used per year as incentives for Maker participants. That's pretty huge. So now, like, if 500 million is going to enter the market and you want access to any of that yield, you will need to either hold Maker or use Maker's products, which is pretty insane, right? And then obviously there are the things I was talking earlier about, which is central banks are lowering rates. So the gap between traditional yields and the crypto yields will even grow.
You also talked about Maker is expanding to other chains.
Yeah, that's right.
Is huge because right now it's really only on Ethereum.
Another thing is Maker right now is available just on Ethereum mainnet, but who uses these days Ethereum mainnet, right? So they really need to expand to other chains. And to other chains, I primarily mean Solana and Base, because probably those two chains will get the most adoption and new users in the upcoming months. So if Maker is not available there, that's missing opportunity, right? And that's something they can't miss it. Like the next 12 months will be super beneficial and huge for crypto. And if Maker is not able to tap into that opportunity and catch a new user base growing on Solana, a new user base growing on Base, that's gonna be a huge fall. But they are well aware, and I think Maker is going into Base in few weeks. Yeah. And yeah, Solana, of course, Solana is the best performing these days, and like since the beginning of the year it was just Solana hype, right? So maybe it's gonna be like Solana year, I don't know. But yeah, Solana is cooking something really useful and people love it. And I don't want to get into details like what I think about meme coins and all the activity that's there because of meme coins, but yeah, Maker needs to be on Solana for sure as well. So just expanding to different chains, then the macro conditions will improve and will just emphasize the yield that Maker is able to offer. And then the incentives, which will make like a lot of motivation for people to use Maker or hold Maker. So those are pretty strong catalysts for Maker.
For sure. Yeah, very bullish setup. Okay, before we wrap here, Martin, can you give us an idea of what are your expectations for Maker in this cycle?
Even though I don't like do expectations and set the price targets, I'll just say it all depends on how Maker will be able to manage all the challenges I was talking about earlier, and it will result how much revenue they are able to make and generate, right? But we are pretty bullish, and we think that Maker can still generate about more than 1 billion in revenue in the next year. So it's just like 3x from these levels. It's not that super optimistic, you know. I think it's pretty conservative, to be honest. And some guys are expecting Maker to generate 1.5 billion even. So we are yet to see it. But if that's the case, I don't I don't know why Maker shouldn't be traded around 10 billion FGB, which would which would be price wise 6x from here. So now we are like 1.5k. So Maker could be traded around 9 to 10k. And I still think that those are still kind of very realistic expectations.
Yeah, because those expectations are based on fundamentals. That doesn't include the speculative hype that also will likely happen in the next few months. Is more people are going to be talking about a lot of tokens in the space, a lot of new people, a lot of retail are coming in. What are they going to look to buy? Especially a lot of like the institutional TradFi investors, those types are going to look to buy the tokens that have real fundamentals behind them, which could push Maker even higher. So I think 6x is on the low end of what we could see this cycle. But I think the main thing here with Maker in this trade is if you guys are getting involved in Maker, if you're holding Maker, this is a trade in a more on your the side of your portfolio that focuses on the fundamental side. So this isn't your like fun money where you're going to try to go get a 100x. You want to go try get a 100x, sure, go buy a meme coin or something like that with a little bit of money. But this fits in more of the less risky side of your portfolio and the side that really could see more of a consistent or a reliable return in the next 12 months. Martin, any final thoughts to share with us before we let you go?
Yeah, let me just say that I'm trying to model this out and using very realistic expectations and projections. But what can pretty easily happen is that Maker will catch next narrative and it will go just nuts. And but that's something I cannot really kind of project in my estimations, right? So I rather be more realistic and just looking at the numbers so it still makes sense to me, and like I know why I'm holding MKR or Sky, and I sleep well because I have some reasons and I have something to back it up when some things go wrong. But like price wise, Maker can do like much more. But I don't know, like the upside is obviously unlimited. So at some point it can be traded like really crazy valuations. But yeah, I rather tend to be like more grounded and have more grounded expectations and then be surprised than the opposite.
Well, we appreciate your perspective, Martin. Everybody, thanks so much for listening in today. Today ended up being a little bit longer episode than usual, but there was so much value in it. We just had to give it all to you guys. I want to know, how do you feel about Maker? Let us know if you guys are holding Maker, if you're bullish, if you're looking at Spark as well. And coming up in a few weeks, we're actually going to have Sam McPherson, the CEO of Spark, come on the show to talk about what they're doing over there and dive deeper into that. Also, if you want more access to Martin, you guys should go pro, because Martin is in our Discord and available to all of our pro members 24/7. I mean, maybe not exactly 24/7, Martin, but he's available. So if you have questions about your portfolio or your investments, go pro today. Hit the link in the show notes and you can get direct access to Martin. Martin, thanks so much again for joining us. Have a wicked awesome day, everybody. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.